So now let's talk about another structure. I'm still on structures. Let's talk about business structures. So now this business structure I want to talk to you about is money accounting. I want to talk to you about the LLCs I just told you about. I want to talk to this about hiring families. Oh yeah, we cooking, Kareem. We cooking. We cooking. Business structure is very important. You are a business, man. You are a business. So now, here's something I need you to wrap your head around. Very simple, very easy, very lucrative, very, very, very important. How and why to create a money and property management LLC. Once you have bought your real estate, I need you to understand you do not collect the rent in that same LLC you bought the property in. Why you don't collect the rent in that property? Because if you have that same property with that bank account connected to that same LLC, all that money goes into that LLC. Now somebody slips and fall, you get a lawsuit on that LLC, your bank accounts can be frozen and now your money's frozen. Now that money is trapped. You do not have the same, you have to become savvy with business. How do you do this? Let me go over this first. You're going to open up an LLC in the state you live in. The reason why it's going to be in the state you live in, because you're going to be doing taxes from this LLC. You're going to go to the irs.gov. You're going to get an EIN number. After you get that, you're going to open up a bank account. All your monies you will collect for your rent, even if you have a business, and if you don't have real estate, your money coming in from your business, you need to start separating that from your business to protect your cash flow. Now all monies will go into this bank account, and now you will apply for a business credit card. The reason why you need this business credit card, so you could start buying things on this business credit card and use it as a write-off. Those of you who have a business, those of you that have real estate, you're using your credit card, you're going to Home Depot, you're driving your car, you're going to do, there's an app called Avalanche. You need to have these apps to write off the depreciation of your car. Your accountant will tell you, I need the mileage. You will simply open the app and send them the mileage. Now you're writing off your car. You're going out with friends to dinner. You're having these conversations about business. Use that business credit card. There's a thing called book and vacations. Once you have your LLC, once you have your business, you're buying real estate. Even if you're not buying real estate yet, even if you're not buying real estate and you own no real estate yet, you're a real estate investor. You want to go to Florida on the weekends. You want to take your kids, your family. How do you do this and make it a business write-off trip? You set up a real estate meeting on Thursday. You set up a real estate meeting on Monday. You go to the meetings, you sign in, you get your business cards from whoever's holding the meeting. You get a sign and make sure that it's accountable that you showed up to the meeting on Thursday. You have another meeting on Sunday. Would somebody type in the chat, please, what will you be doing until that meeting on Monday? Chelsea laughing at me. What will you be doing on, you will be on vacay. Turn up. You will be writing off 30, 50 to 70% of that vacation. Your food, because you're an investor. You're going to look at real estate. You just had a real estate meeting. You got another real estate meeting. You got to understand, guys, the wealthy do this, and we think we can't because we are not giving clarity. Collecting your rent. Those of you that are real estate owners now, when you're collecting your rent, okay, cool. You can keep your structure. Do it the way you want to do it. God bless you. Keep doing that way. What works for you. But I'm going to give you a recommendation. Have your tenants, when the lease renewals, have your property manager lease in your property management name. They signed the lease. They're paying the rent to that new property management account that you have that money going over there, separate from your other account. Now you're going to be able to write off things like having a home office. Once you have the home office, you're going to be able to write off things. You know what? I'm going too fast. Let me slow down. I want to go to this. Let me show you how this first. Let me show you how you collect the rent. The rent is collected and it's coming in. For those of you that have real estate out of state, property managers are going to be collecting the rent. Cool. They give you the rent. If you're collecting the rent, you're going to put that rent inside that bank account you just created that LLC for. The rent goes into there. And if you are an investor and you have property in other states and you've been getting the money coming in and you've been paying all these taxes in these other states, when a property management company collects the rent, they transfer the money to you. You do not have to pay that income tax in that state. You pay business privilege tax, which is anywhere from $150 to $300 a month. Even if you get $7,000 coming in, you only pay the business privilege tax because they're collecting the money and they're transferring the money to you. Come on, I don't see no fire in the chat. I don't see nobody excited. Come on now. Come on now. You're avoiding the tax because they are paying it. The business privilege tax you will be paying for. All right? So now, stay with me. The money came into your bank account because they transferred it in there. Now, remember, we just invested with Kenyon on that apartment building, right? So we got the money coming in, the rent's being collected, property management is putting it straight into that bank account. This is how all of us as investors are going to get paid out the bank. All we're going to do is get Zelled our money to our property management LLCs. You will have an LLC that's a property management collector. If you want to collect the money in your name, go ahead. I'm not mad at you. Do what you want to do. But remember, when you have an LLC collecting the money, you're going to be writing off your home office. You're going to be writing off a portion of your light, gas, heating, internet, everything you're going to be able to write off because you have an LLC, not because it's in your name. You're going to be able to write off those things because you have an LLC. I have so many people say this. Oh, you don't need an LLC. You don't need to do all that. That's too much work. Okay. God bless you. God bless you. But I'm telling you how those that have means make money. Do you think Jay-Z and Beyonce houses in their name? Do you think they cars in their name? Do you think Jeff Bezos have his house in his name, his car in his name? Name any wealthy person you want. Do you think their name is on these things, or they have businesses all owning these things for them? And now the business write these things off. Do you think, come on, y'all. So when somebody tell you, nah, you ain't got to do a lot, you know what you tell them? You don't even have yourself set up straight, and you trying to tell me what not to do? Take advice from somebody who's doing it. Take advice from somebody who's structuring it. When they say they said, who's they? Who are they? They don't have their stuff together. All right? So now, also out the same bank account, you're going to be paying the mortgage from this account. You're going to be paying the mortgage from this same account. Rent came in, went into there, paid the mortgage. Everybody gets paid. We ain't got no problem. We all cooking. We all partners. We got the agreements, all the stuff. This is what it looks like right here. This is what it looked like. So the benefits of having that, I went over most of that. I went over the taxes, how to write off all these taxes, how to have the benefits of the home office, the light, the gas. I went over all that stuff with y'all. Taxes, taxes, taxes. I need y'all to do this. Take a step back from thinking taxes is something you need to always get a check from. Man, I can't wait to get my tax. Wealthy people ain't thinking about getting a tax return. They're thinking about how many things they could write off on the taxes. They want to go out there and spend money, have all these taxes accumulate, and then they go, well, how can I write this off? How can I, this is the difference. You know, put the questions down. I'm going to answer all these questions at the end. I'm going to cook, and I'm going to answer every question. So remember, write your questions down as we're going to cook. Remember, y'all, there's a structure to this. People didn't accidentally gain wealth. They got structure for this. So now overall expenses, the mortgage, I went over that, the property taxes, homeowners insurance, the utilities, gas, light, water, internet, phone, home depreciation, security system, all of that stuff. All you got to do is have a home office and an LLC. Now, for everybody, you're going to be able to get this book. I have the audio for you. All you have to do is click where it says listen to audio.